With numerous tools that can be used to value stocks, some of the most useful ones remain as hedge funds and insider trading signals. Hedge funds have access to expert networks, and they usually get tips from industry insiders as well. Hedge fund firms constantly search out bright intellectuals and highly experienced employees to throw away millions of dollars in research activities, so it's no wonder why they tend to generate millions of dollars in profits each year. It's also true that hedge funds perform miserably at times, but their harmonic picks after risk adjustments have historically outperformed the market. Even when many eminent investors like Warren Buffett remained cautious about the bull market, hedge funds were not timid and beat the gains to the double-digit market. Although industrial stocks and financials initially suffered, hedge funds were able to increase their positions in these stocks. However, in the recent months, hedge funds have changed their sentiment regarding the Apple stock. In this video today, we're going to explain how Apple transitioned from being a gadget-making sweetheart to pariah for hedge funds. As a leading global consumer technology company, Apple's main value comes from their incredibly strong brand name and sleek product designs. Their enduring popularity enables them to charge premium prices for their products and generate outsized profit margins, while also enjoying a broad and very sticky customer network. Despite the remarkable profit gains and success, Apple still does face a few challenges. While Apple as a business has been firing on all cylinders lately, the same cannot be said for the shares of the stock. Apple investors must be well aware about the decrease in hedge fund interest recently. By the end of March, Apple was in about 127 hedge fund portfolios, ranking 12th among the 30 most popular hedge funds. Their all-time high for this statistic is 152. So why should you pay attention to hedge fund sentiment? As we said earlier, hedge fund small-cap stock picks beat the market by double digits. This happened annually for some years, but the outperformance is found to be declining in recent years. Nevertheless, there's still a record of a select group of hedge fund holdings that outperformed the S&P 500 ETFs by more than 115 percentage points since March 2017. Even small investors can learn a lot by tracking the moves of corporate insiders and hedge fund. Reading hedge fund investor letters, 13F filings, and listening to stock pitches at hedge fund conferences can be beneficial. Keeping this in mind, we're going to take a peek at the recent hedge fund action encompassing Apple. So what do hedge funds really think of buying Apple stocks now? With a change of minus 13% from one quarter earlier, 127 of hedge funds held long positions in Apple as per the second quarter of 2021. Firstly, let's take a look at which hedge funds made the big moves in Apple stock. Holding a position worth $108.36 billion in the stock, Berkshire Hathaway, managed by Warren Buffett, holds the largest position in Apple, which comprises 40% of the 13F portfolio. The number 2 spot belongs to Fisher Asset Management, managed by Ken Fisher, worth $7.67 billion. The fund has 5.4% of its 13F portfolio invested in the stock. The list continues with other peers such as Ken Griffin's Citadel Investment Group, Phil Gross and Robert Atchinson's Adage Capital Management, and Israel Englander's Millennium Management. Apple has also lost appeal among smart money, and some fund managers even cut their full holding in the first quarter of 2021. Jeffrey Talpin's Element Capital Management fared well to the biggest investment of all the hedge funds, valued at an estimated $211.4 million in stock. Similarly, Michael Larson's fund and Bill and Melinda Gates Foundation Trust also sold off their Apple stock worth of $133 million. Not to forget Berkshire Hathaway's massive sale of Apple in the first quarter of 2021. Warren Buffett's conglomerate owned as many as 1 billion Apple shares as of the end of the second quarter of 2020, but the position has been trimmed to less than 900 million today. Cathie Wood's ARK Invest completely unwound the position in Apple after a sequence of recent portfolio trims. The famed asset management firm used to hold Apple in their FinTech Innovation Fund, but was no longer an investor in Apple's equity. Since total hedge fund interests dropped by 19 funds in the first quarter, these transactions seem to be pretty interesting. The 200-plus hedge funds covered by the online platform sold a net 376,000 Apple shares in the second quarter of 2021. A decline in the size of the Apple positions by hedge funds has been observed since late 2019, from about 1 billion shares then to roughly 900 million today. Now let's take a closer look on the hedge fund activities in other stocks as well, since their market valuations resemble Apple's. For industries like Microsoft, Amazon, Alphabet, Facebook, Tesla, Alibaba, and Taiwan Semiconductor, the average of 172.7 hedge funds with bullish positions was observed. Among these, the most popular stock is Facebook, while Tesla is the least popular one. Although Apple is not the least popular stock in this group, their hedge fund interest is still considered below average. Stocks having higher number of hedge fund positions relative to other stocks in historical range receive a higher sentiment score. This diverts Apple slightly to the negative side. In 2019 and 2020, the top 5 most popular stocks among hedge funds returned 95.8% and outperformed the S&P 500 by 40 percentage points. These stocks gained 17.2% in 2021 through June and surpassed the market again by 3.3 percentage points. Unfortunately, Apple was not nearly as popular as these 5 stocks, and Apple investors were disappointed as the stock underperformed the market with a return of just 4.4% since the end of March. What does this mean to you when hedge funds and other bigwigs of investment management lose interest in their Apple shares? Is it time to sell, buy, or do nothing? Leave your opinions in the comments below. Thank you so much for watching the video. Please leave a thumbs up and share the video if you liked it. For more content like this, subscribe to our channel and hit the notification bell to never miss an upload. See you guys in the next one.